Thank you, everyone who's here listening. Before we start, full disclaimer. We are not professionals nor certified stockbrokers. We do sell, buy, and trade stocks, but at our own discretion. The content that we talk about is based on our own opinion, not fact, and the content is for entertainment purposes only. Remember, what you invest is at your own risk. If you know nothing about stock investing, we highly suggest you seek professional help. Also, due to the content of the show, this is for mature audience only. Welcome to the Hustle, the Struggle Investment Podcast, where two regular guys not from Wall Street come together and simply talk stocks and investments. We're here to give you the raw and uncut stories of an everyday trader. Tune in and zone out. Let's talk money.
Testing, 1, 2, 3, testing.
Okay. And what's the topic again?
What is it? When to hold and sell.
When do you sell a stock? Okay. Yo, what's up, everybody? This is the Hustle, the Struggle Podcast. Happy that you all are tuning in. This is your host, Herbert. We have a cool episode. We're on episode 8, where we talk about when do you sell a stock, long-term versus short-term. So from previous episodes, I've always said that you want to come in long-term by default, even if you have short-term intent. But in this episode, we're going to break it down. When do we think it's appropriate to sell a stock? But before we do that, again, we have to do our shameless plugs. But we are on social media. Make sure that you search The Hustle, The Struggle, or The Hustle, The Struggle Investment Podcast. You can find us on Twitter, Facebook, Instagram, and YouTube. And we're streaming from Anchor on other audio streaming platforms. So let's just dive right in. You ready, Dave?
Yep.
Cool. So this should be an interesting one. Oh, and I wanted to just say a disclaimer for the audience that there's an event that's going on. So if you hear any background noise, just apologies in advance, but it shouldn't be too loud, shouldn't affect the show. So let's enjoy. But back into the program. Yeah. So Dave, when is it the right time to sell a stock? That's a tough one for me. As I mentioned in prior episodes, that I'm always in long term. Even if I do expect short term gains, I don't know. Like my short terms is day trading. Like, so I will have it no more than 48 hours. And I'm specifically coming in with short term intent. I'll just buy a plethora of shares, like maybe 200, 300, however I can afford, try to make a quick couple hundred, $1,000, and then I'm out. So just kind of scaling to like how the market is now. When is it appropriate to sell? I don't know. So our last episode was market downturn, right? And we did talk about stop loss. Yeah. So I guess I can say, just to start off, a good time to sell is if you do enough research and you have a pessimistic prediction that the market will have a downturn. That's when you want to sell. Collect any gains that you have and just make sure that you pay attention to the market so you can buy in at the right time and then you can get back in at a good time when it's back bull.
Yeah, I mean, that sounds like a pretty good time. I don't know. I guess for me, just sell when you've reached your goal.
Yeah.
Just kind of to broaden the topic out. So, there are times when you may want to hold it and short sell or long term. But I think it's just always good if you have a goal and you've reached it, you can feel satisfied and not feel too greedy. Yeah.
Well, you always mention greed, and I'm with you on that. You shouldn't be greedy, but I know you talk about that. I feel like you're a little more passionate and aware of not being greedy.
Yeah, I mean, it takes on a lot of forms, but
So my question to you is, forget that the market is on a downturn. Forget what I just said. Let's say that the market is healthy. It's doing what it's supposed to do. And you've made some money. You've made a lot of money. What do you think this is going to be a tough one, but it's the appropriate cap to when you should sell a stock and not feel greedy. Like when you've made $5,000 on a share, $10,000. It's actually kind of a dumb question because the whole goal is to make money. So if you know you're at 5,000 and you can make more, you're going to hold, right?
Yeah, if you know that. But of course, who knows that? Yeah. I've always thought about this because you never know if it keeps on going or it comes down, the price. So I've kind of thought maybe a staggered tiered approach is good, you know? So if say you've made a lot, take your initial investment out if you can. If you take out an initial investment and you still have, I don't know, like 25-50% left, then yeah, you know, and it's still going up, like there's no reason. In fact, there's probably not much reason to take any money out until it starts going down. So you always talk about stop losses, and I actually don't use them that much.
Yeah.
But I'm going to start using them more for sure to at least keep my initial investment.
Yeah.
Because after that, you know, you haven't really lost money. You just lost potential profit.
Yeah.
That sucks, but it's not as bad as actually losing money.
Yeah, but you have to tie like stock strategies too. I think it's a lot of data analyzing that's involved with that. You know, short selling, like you kind of buy into a bull, you know, it's a short-term gain. There's a certain cap before the stocks go plummeting. So obviously if you aware and you know the data that's involved with that, you know, then you can buy in, make your gains, make the money, and then reach that cap and then sell.
Yeah, I mean, if you know what's going to happen, then yeah, just do that. Yeah. But in terms of, well, lately, for example, like when IPOs come out, I don't hold them. In fact, those are probably the shortest holds I've ever had is on IPO day. You know, in fact, kind of, I begin to worry holding them past IPO day. Every day that goes beyond IPO day, I'm thinking, and that's not always been true. I mean, I remember Facebook went IPO, and I've held that for until recently. You know, I still do. Yeah. But in the last year or two, IPOs, they just seem to be more like a flash in the pan. You know, so that would be a short sell for me. Long term, I guess on the flip side of that, long term is things that I can still see being around and relevant in like 5 to 10 years from now. You know, longer. Yeah. If it could be around for 10 years, yeah, I'll feel a lot better. Yeah. That's a hard call.
With the IPO, it kind of aligns to what we talked about in prior episode with the company valuation. When you have these companies with high expectations, you know, we're going to go IPO, we expect, you know, a 4.6 billion pool or revenue or whatever. And then I don't know, it's, you know, because it's an IPO, you're kind of sitting on the outside. It's like, how much of this information that you put into the company were you confident, you know, for it to buy in and it would be successfully bull for a while. And you're right. Like I've noticed with a few new IPOs, there's always that cap. There's a bull cap, but then for a while it goes into correction.
Yeah.
It sort of stabilizes, and it never stabilizes at the cap. It drops, and then you have to wait a while until it recovers and go back up or continue to go up. Yeah. Yeah. And I feel like a red flag, possibly, if you buy into a new IPO and it's bull and it remains bull. And at that point, let's say on a weak spread, if it continues to go up, then expect a crash.
Yeah. You know, these unexpected behaviors I'd be suspicious of, you know. Yeah. I mean, you know, when they go IPO, they go up, they go down. I mean, that's every price. I don't even really hold steady. No one looks at those anyways. Yeah. So, yeah. I think there's an opportunity to buy in those IPOs, make some money or some gains, I guess. But beyond that, I mean, the company just debuted, so how would you know?
Yeah. Another part, too, is the quarter earnings. Yeah, there's always volatility when it comes close to a quarter call.
For sure.
Or earnings call, I'm sorry.
Yeah. Before, there's a lot of activities, and definitely after, depending on the results.
Yeah. Oh, man.
So there are, and, you know, there's different, I mean, in terms of, I guess, to go back to our topic on when to hold, you know, to sell or buy, on the buying front, there are even I guess on the selling, there are some key dates or some that I think people should be aware of, some basics when you buy a security or some publicly traded company. Is that earnings.
Yeah.
They have earnings, quarterly earnings. I don't even know if there's anything beyond quarter earnings, but you need to keep an eye out for that. You also, and when the stock debuts, the IPO, and that's also, important.
Yeah.
And then there's a day of records for dividends, So if you have shares in that stock by a certain date, then, you're entitled, you can get some dividends. So I think those are some basic things. And that may, you may want to decide to buy and sell around those points. I think a lot of traders do.
Yeah.
During those times.
I wanted to just chime in and, if you don't mind, just tell the public what an IPO is. This is for like the new investors that don't know some of the terms.
Initial public offering. So anytime something like, a stock goes debuts on a market on the NASDAQ or, New York Stock Exchange,
S&P 500.
Yeah. It goes through an IPO. And that's like usually the time when you see someone up on that bell, with a bunch of people, and they're drinking champagne and this stuff. That's probably
when it's good results.
Yeah.
And then the opposite of that is you see that guy that look all distraught and disgruntled with his business suit. He has his chart. He's just like, oh, fuck.
Yeah. That's the other side.
Yeah. He just lost his puppy. But damn, I don't know, man, when it is appropriate to sell. I think that I don't really think there's a core answer. It's really just up to you and how you feel justly. Are you comfortable with your gains? Are you comfortable with the market? Is there just an overall good outlook? But pondering the question is important so we don't get wrapped up in FOMO, to what we talked about in the last episode. Like, you're comfortable with what you have and you can walk away. And I feel like that curbs the greed in ways too, because FOMO, woulda, coulda, shoulda, that all associates with some form of greed. It's not definitively greed, but why do you feel like you're missing out? Why? Because you want more, and more. So if you just ponder the question to yourself, when is it a good time to sell? Like, you should always have that thought in your mind. So as I always express, by default, consider long term. The antithesis of that is, when is it a good time to sell? Well, I wouldn't say the antithesis, but just keep that in consideration as well, in addition to when is a good time to sell. So coming in as an investor and you buy shares, set a target for yourself, set a target price. I think once it hit this, then I'll sell XYZ number of shares. Yeah.
You may want to diversify within one share, how you want to split those shares and how you want to, sell them in allotments or, in all. You could buy different shares at different times. So I think also another important thing to mention in this talk is taxes, right? So when we talk about short and long term, I think we're talking about like short and long term capital gain and how that's being taxed. So short term being taxed as it'll just be considered income. It'll be added to your overall income and taxed based on your income. But long term, which I think is 1 year or more, it seems like a long time to hold something in this in today's world, Yeah. But 1 year gets taxed at a more lower rate. Yeah. It's not a fixed rate, but it varies, but it's a lot lower than. Really depends. It could be a lot lower than what your income is. Of course, if your income's that low and you're getting taxed low, then it's a different story. But
yeah. Well, actually, I'm glad you mentioned that. And for sure, just for the audience out there, we're definitely going to have an episode about taxes in the stock market because that's very important. But I remember what you just said reminded me of this YouTube video I watched. I forget the guy's name, but he's like a musician. He does these like card trick acts and stuff, but he talks about investing. He's a really cool dude. And the only reason I mentioned the magician part, because if anyone that's listening is familiar with this guy, he does a lot of card tricks, magic tricks. Why he talks about investing, then these people will know who I'm talking about. I'm sad and I don't remember his name because he's a cool dude. And I actually get a lot of insight from him. But he did a video where he mentioned a good point where a good time to actually sell is towards the end of the year, last quarter, so you can collect taxes off your losses. So he said when you want to reconstruct or rediversify, dump the securities that's at a loss that's least favorable to you, the ones that you don't care about.
Report the loss.
Exactly.
Yeah.
So like if you have a share and you know that it hasn't been much traction, it's been neutral for a while, and you've been in the red, you're more pessimistic about it. You don't really see any future innovations out of this company. Just let it go, but do it towards the end, right before tax time, so you can, collect a little bit of taxes off the loss. But I thought that was a good point.
That's an interesting point, but I think there's something called a wash that you have to be careful of too. It's about buying and selling within a 30-day period, number of times during.
Dude, I've been in so many washes, man.
And
I'm
it comes out on your 1099. It shows you. It's like they call it right out.
Yeah.
So these are things that we really need an expert on this, or someone who's gone to jail over it. Right? I mean, that's a real expert there.
So Jordan Bedford, if you just so happenly come across this podcast, we would love to have you on the show.
Oh, okay.
That's like the first person that came to mind. Someone that's just criminal and clever, like have a whole legacy and story behind that. But you're right. Because I'm definitely in that situation. I've had a few washes in my portfolio, and I don't know, man.
Yeah. Let's see. Let me back to the subject I want to sell. Like in the past, there's just been kind of moments in my life where you just felt that it's to sell. I've had a couple. I mean, mostly driven by needing money. Mm-hmm. But just having an investment that has money value locked away over time, and it grows over time. Preferably, hopefully, but having something like that. And life in general, not knowing what's going to happen. Yeah. There's some risk involved, but it does bring some security.
That's a good point.
Yeah.
And in addition to it, to add another one is, I think, competitive industries. The industries is always changing. You have industries where like gold is dominant in the market. Electric vehicles is dominant in the market. Tech stocks or pharmaceuticals. And I think that's another thing to be aware of is what's the highlight in this time, in this quarter, in this moment in the market. It's a good time to buy. And basically that's forecasting. Yeah. You make a prediction on what's going to be the next big thing or the next sensation for a little while. You buy into these progressive companies, blue chip or individuals, however you want to describe. And then when you have that movement, that bull volatility, it's a good time to get in. But once you reach that cap or the sensation kind of curbs into something different, then it's a good time to sell. Then that way you're not really stuck with securities that had a good run, but eventually took a downturn. Yeah. So that's another thing to configure. But you're right. I mean, we really need like we need like a professional, like a legit professional to really break this down, because that is forecasting.
Yeah. I mean, forecasting, like who's a professional? Like the people who are more right than wrong, like 51% of the time.
Well, I'm pretty sure it's a science to it. It's a science that I don't know for sure.
Yeah, that's true. Well,
I can say this. The way I forecast, just as an individual trader, just reading articles, seeing. My core component is the innovation. And what I mean by innovation is what's new to the market? What's the invention? Is it original? Is it something of value to the everyday consumer, to the person, or to the technology itself? So for an example, QuantumScape, that's a company, and I think I mentioned them before in previous episodes. Company. The battery company. And one of the innovations is they're trying to create a battery where there's less charges that's involved and it's more durable under certain weather elements when you talk about electric vehicles and autonomous cars. So to me, I think in long term, that's going to be a large innovative component that's into the automobile industry.
Yeah.
So even though just in real time, QuantumScape, they've been pretty volatile. They capped, I think, all the way to 130, maybe 140, just around that range. But then they dropped all the way down to 50, and then they going through a lawsuit at this moment.
Oh, really?
Yeah. I'm still optimistic because I feel like if they pull through, and then part of the innovation is what are the competitors? If there's a wide range of competitors, then they're not as exclusive or original as we think. Whereas if there's a niche amount of competitors, if they're the forerunners, I think they're the ones that's going to get the most attention. And in the end, relatively, they'll be the most in value. So that's kind of how I break it down, seeing some of the innovation. And of course, that applies not just to the industry itself, but even if it's a product to the consumer.
Yeah. Yeah. I mean, that makes sense for sure.
Yeah. But just knowing then. And I think, with this electric vehicle being new, I got my chips in a couple of electric vehicle companies, as I mentioned prior. And of course, I'm probably not going to hold them for 10, 20 years. I think this is definitely something that's going to swan eventually.
Oh, yeah.
Yeah. So that would be another example of when to sell, just paying attention to the industry. Like how long is it going to progress?
Yeah, it's pretty interesting, especially EVs and in the car market. There's a lot of established players. There's been a lot of consolidation.
Yeah.
Decades ago, still kind of actually recent, I don't know, 2004, even after that. Now the electric car companies, I expect a lot of kind of growth in that market.
Yeah.
But a lot of companies that have grown to disappear. Maybe some of the old companies like the gas car companies will disappear.
Yeah.
Maybe they'll consolidate, So in overall sector activity, I do expect quite a bit. Mm-hmm. And honestly, the auto industry has been kind of stagnant, I think.
Yeah.
I don't know. It's kind of interesting to see this kind of, new thing. But what I'm really looking forward to something, and maybe it's like, maybe an indicator or something that I would want to buy into is like, I'm sure a lot of people would actually, but if something new, not like the internet, but something new like the internet came around.
Yeah. So, the internet was a mastermind.
Those game changers that they call.
For sure.
So.
Yeah, it's just like when whoever invented the cell phone to be like a computer.
Yeah, smartphone.
GPS, dude. I think GPS is one of the best inventions to me.
Yeah.
I was oblivious to investing then, but if I would have known like the company was it Google that introduced the first like mapping system?
Oh.
Couldn't be, right? No?
Well, like, do you remember MapQuest and stuff?
That's true.
And
not
Google
even
bought it. But GPS.
Well, I'm talking about the application because there was already GPS devices before Google.
Yeah.
But I'm talking about the actual application where you can look at your phone and the phone would tell you directly where to go.
I think you're right. Google's.
I don't want to say that confidently, but I'm pretty sure there was maybe multiple developers before.
There were companies, but ultimately Google bought them out.
Yeah.
MapQuest could tell you direction. I remember traveling and printing out like 20 pages of MapQuest directions. Of course, when you're driving at night, it's just useless.
But you know what I'm talking about, though? Those old GPS systems.
Yeah.
You used to have to buy them and you keep them in the middle of the car. Yeah, exactly. This is before apps and phones.
Those are the Garmin's and the Tomcats or whatever.
But when you had it on your phone, to me, that was revolutionary.
Yeah.
Revolutionary.
Yeah, it was.
Just going from point A to point B, and you're like, go left, right here. Like, thank you. No, because I remember them days. I took those road trips where you had MapQuest, and I had those sheets of paper, and you're driving, and you're looking at the paper, and there's a good chance you can have a collision because you're not really fully focused on the road.
Yeah.
Whereas if you have your phone, the phone is hooked up to the car, you just listen to the radio, and it's like, turn left in 3 miles. It's like, yes. You're just cruising, right? Let's say if you have your friend in the car, they like, man, have you been here before? Like, no, it's the GPS.
Yeah.
It's the only reason I know where I'm going.
I'm kind of really thinking like this is all going to mean like big changes in the transportation sector, automobile, consumer, commercial transportation. That might be the next big buy event.
Well, I do believe in flying cars in the future.
Yeah, I mean,
I believe in that.
Flying cars is a new term for I always believe in something in the future that may never happen.
Yeah, I mean, it definitely not during our time, but
yeah,
it's a possibility.
Yeah.
But anything is possible nowadays. It's really just who's willing to take the risk and who can engineer it. That's all it is.
Yeah, and I hope people still are willing to take that risk. You know, the world still needs it. I don't think we've maxed out on that at all. We're probably losing more than ever.
Yeah.
Ingenuity and people who want to take these risks. So, you know, people got to step up to the plate.
No, for sure. And this makes me think about the whole AI and the market thing again. So when we pose the question, when it's appropriate to buy, like what's the algorithm behind that as well?
Oh, it's easy. What is it? Buy low, sell high. Like we should just start an episode with that. You know how many times you hear that when you talk about investment, you know? And
yeah.
There's nothing wrong with it, but
that's a cliche way. That's why I said in the very beginning that this would probably be a difficult topic to talk about, because cliche is like, yeah, you sell when it's high, but when do you know?
Yeah.
And that's all part of the forecast. But if you're not able to forecast and you're just a person that has share and you have high gain, like you said, it's the greed component. Ask yourself what's appropriate for you so you don't find yourself in a fork in the road if you continue to hold. What's the industry? What's the longevity? What do you want to get out of this? And what's the next step after what you make?
Yeah.
And I think we even said this in the last episode as well, is like, do you need the money? With the money that you invest in what you've made, what would you need for that after? Are you going to reinvest, take it out, buy something? You know?
Yeah. Yeah. Have some goals, have some, plans, and just try to stick to it. I don't know. There's so many different reasons, and just.
I mean, we already know why you would buy, or when it's right to buy. Like, you buy when it's low.
Yeah, of course. When is it low?
But when it's not low, when should you buy?
Yeah, yeah. I don't know. I mean, I do know when I do it, but just trying to put it into words, it's
it's a hard one. I mean, you only can say so much, right?
Sometimes I just wake up and I'm like, oh, it feels right to buy. Sometimes I just feel like, okay, buy, and seems to work, but it doesn't always work. I think you should be somewhat familiar. Like there has to be something going on, whether you know about it or there's some hype, like in say like short selling. Those are worthy buy time, opportunities. They're awesome if you know about them.
Yeah.
Yeah, if you think there's great potential, I don't think it's just enough that this business is doing business and has been around for 40, 50, 100 years. That's no reason to buy a business. It's important. It's a good factor that they've been around, but what are they offering now? And when I talk about this, I guess, I think about companies like IBM.
Yeah.
Like they were great before. Where are they now? HP, where are they? Where are they going now? And other companies, every company for that matter. But
well, I think it's the competition that disrupts that, because with every company, there's always a great idea. That's how you're able to become a business. You have a great idea. You have something that's great to offer into the market, and the market could be anything or anyone.
Yeah,
you just have something that's of value. But part of that, people see it, they use it. They look into it, they research it, and then that value is made in a different way, different perspective, different outlet, or even replicated. And then once you have the competitiveness, then that originality and that value that you had, it kind of deteriorates. Then you can get it from this person or this entity at this price, get it from this entity at that price, and kind of dilutes it in ways. But yeah, you're right. Like going back to the automobile industry, like the Fords and the Chevys, and I don't really follow much of the automobile now. So I'm more aware or more inclined on the electric vehicles, but I know Ford been around for years and years and years, and they're low value stocks. You would think that they'd be worth like $200 or $300 a share, but no.
Yeah, it's.
But people have been buying Fords for years and years and years. So that says a lot about the competition and innovation that's in the automobile industry.
Yeah. And I think even a company like Tesla will be great, at the beginning, and then two brothers in Tesla who helped design them probably start their own company like they did in Dodge and competition, and then the prize of the industry, the first, and then the best is no longer that.
Yep.
Nothing lasts forever, that's for sure. And that's when that buy turns into a question of sell.
Yeah.
Yeah. You got to stay on top of things, that's for sure. So for people who who are new to investing, if you feel like you're just going to set your money and forget about it, only if you know what you're doing.
Yeah.
Like that's a strategy, sure, but only if you know when to use that strategy. It's not 100% of the time, and
it's a strategy, but it's a
you
poor
have to pay
strategy.
attention to what's happening, like how the company's doing and what they're
I remember I had a friend that told me that, dude. I got so upset, and she was like, "All investing is you just buy some shares and forget about it." It's just like, you just don't forget about it.
Yeah, because when you click a button nowadays, there's no like mountains of paperwork, that get saved along with that click a button, but there's something to be said about buying some shares and forgetting about it until you're.
Well, there's so many disruptors. Like, come on, we just said competition, lawsuits, the market itself.
Yeah,
it's a lot of downturns, man.
Yeah, but I mean, the thing is, companies have been always coming and going.
Dude, I would never buy a stock and not look at it like once a week. Oh, and actually, I'm glad we brought this up. This could be another tidbit for the listeners, the audience. But for me, even if I'm not day trading, at my worst, I look at my portfolio once a day. Legitimately, I do. I look at my portfolio once a day. I look at it
often, for sure. Yeah. But I don't know if that's a good or bad.
I've never bought anything and just fucking forgot about it. We've joked about this. I know you said that with crypto. Crypto, I could believe to a certain degree.
Oh yeah, so there we go. Yeah, you're right. Yeah. That's something. You're right. That's where I'm gonna look back at it when I retire or something like that, and I hope I'm like like Forrest Gump, like
It's just people that's getting into investing. If they ever heard that, I just don't want that to resonate. Like, I can just buy this share and forget about it. It's going to be successful in 20 or 30 years. I'll make money. I'll just wait. Like, I don't want to throw that out there. Like, unless you have some crazy mutual fund or something like that. But cryptocurrency, buy cryptocurrency, buy a piece of Bitcoin and forget about it. Then I would say that holds weight.
Yeah, I mean, there's so many different, shares or companies out there. Just it's not all of them are winners, for sure. Yeah.
Oh, and actually, we have to have a couple episodes on cryptocurrency too. I would love to talk about that. Kind of dive in.
Yeah, for sure.
Yeah, I know we mentioned the crypto rabbit hole, but for sure. But I think I don't know, Dave. I think this episode would probably be one of our short episodes. Only because, it's only so much we can talk about to when to buy. And I think we at least laid the foundation. It's really up to you holistically, what you feel is appropriate, but just as things to take in consideration. Yeah. And I think it does pose an important question. It's definitely something that you should ponder as an investor. When is it appropriate for me to buy? And again, not again, but I'm saying again from prior episodes, but people, tune in, chime in, leave comments. Like, when did you feel it was a good time for you? Did I say buy? I meant sell. I said buy all this time. When is it a good time to sell? But yeah, listeners, leave comments. Let us know, when is it a good time? When was it a good time for you to sell? When did you feel that you bought something, you made enough, and you felt empowered by it, if that makes sense. But there's anything that you want to add, Dave?
Yeah, I don't know. I just have a feeling that, yeah, we'll always be talking about this. And maybe in the future, we'll like take some recent examples that we've gone through and, kind of, talk about some specifics. But yeah, this is a short episode, but I just have a feeling we'll always be touching upon this topic on when to buy and sell, because that's essentially, the heart of what this is all about, this trading.
Yeah.
Yeah.
Yeah, but the when to buy part, I think, is the easiest. You buy when it's low, obviously.
Oh, man, they're both difficult, It's like...
But I mean, do you think we should touch on that, when it's appropriate to buy?
I think we could spend, entire episodes just on buy and just on sell. If we really wanted to kind of, try to get some meaning out of it.
Okay.
But yeah, of course, I think people always want to know.
Cool. All right. We'll make that a future project. A future episode. We already touched on when it's appropriate to sell. That'd be a future episode. When is it a good time to buy? Not that it's just when it's low, but other perspectives and other alternatives. But cool.
Yeah.
All right. Well, even though this is a short episode, we still touched on a lot. Still drop some knowledge in dimes to the audience. So thank you everyone for tuning in. And again, please get involved. If you're on the social media platform, leave comments, message, and you can email us at thehustlethestruggle@gmail.com. And as said before, we're on Twitter, Instagram, YouTube, Facebook. So just go to the search term, look up The Hustle, The Struggle Investment Podcast. We should pop up. And if we don't, leave us an email. But I'm happy you guys tuned in. This is The Hustle, The Struggle Investment Podcast. Two guys not from Wall Street, just talking about our everyday lives as everyday traders in the market. But I hope you guys enjoyed this episode. This is your host, Herb, and Dave, main man Dave.
Hey.
And
bye.
Everyone have a good time out there.
See ya.
See you on the next one. Peace. Thank you, everyone who's here listening. For a disclaimer, we are not professionals nor certified stockbrokers. We do sell, buy, and trade stocks, but at our own discretion. The content that we talk about is based on our own opinion, not fact, and the content is for entertainment purposes only. Remember, what you invest is at your own risk. If you know nothing about stock investing, we highly suggest you seek professional help.